The Harley-Davidson Q2 2023 results. Let's talk about that. Let's get cracking. First of all, I want to put the caveat on this video that I am not an expert in this area. This is just my opinion. I have an extensive background with financials, so I can somewhat decipher the kind of hidden layers that go into it. And we'll try to break those down for you to understand. So I will share my thoughts at the end of this video of what I think of this financial statement and take it with a grain of salt. So let's get to the video. The participants have changed up a bit since the first quarter. Of course, Johan Zeiss, CEO, Jonathan Root, who is the new CFO, Chief Financial Officer, 𝕼𝕣𝕒𝕟, CCO, Karim Donez, the new LiveWire CEO, as Johan Zeiss stepped down from being the CEO of LiveWire, and Sean Collins, Director of Investor Relations. Harley then goes into the performance headlines. This is the Go Team Go speech. Strategy remains grounded in desirability and profitability. The 120th event, which was a big deal. Introduced 2 new CVO motorcycles, that was a big deal, as well as the Enthusiast and Icon collections. Gross margins are at 34.8%, an increase of 400 basis points. Revenue declined 4% behind 10% decrease in wholesale shipments related to unplanned production suspension. Harley-Davidson Financial Services revenue increased 19% on a higher interest income and increased investment income. Repurchased $73 million of shares, 2.1 million shares on a discretionary basis. We'll talk about that. That's smoke and mirrors as well. They break it down into 6 sections labeled the hardwire. This ties into Johan Zeiss's CEO message when he took the job. First stage, profit focus. Second, selective expansion, lead in electric, growth beyond bikes, integrated customer experience, inclusive stakeholder management. This is an overview of their earnings per share, broken down with the wins and the losses, and overall they're boasting a 12.3 profit margin. The diluted earnings per share is down to $1.22. Everything else is quoted in millions. The percent versus the previous year is down 16%. End of story there. Their shares are down 16% from what it was in Q2 of 2022. This is the results, all quoted in millions of dollars, except the earnings per share. Bottom line, the net income attributable to HDI is $482 million with a margin of 14.9%. The diluted earning per share, $3.27. Percent versus the previous year is up 12%. Worldwide retail sales and inventory. In North America, sales are down 7% compared to last year. Europe, 6% down. Asia Pacific up 13%, Latin America down 11%. Worldwide, they are down 4% versus last year in Q2 of 2022. New market share. Now this is rated at 601 cc's or larger bikes. US share is 37%, up 2% from Q2 of 2022. Touring bikes, 69%, 2% from last year. Large cruiser, up 1% from last year. And Europe share is up 1% at 5% from 4% last year. Now, if you take a look here, the average dealer inventory per units is rated in thousands. In the second quarter of 2023, they have 52,000 bikes on the showrooms as compared to 27,000 last year in Q2 of 2022. It has doubled. Revenue bridge. The small print says excludes LiveWire results. I think that's dirty pull. 90% of LiveWire is owned by Harley-Davidson, and I think it's dirty pull to not include it in their overall spreadsheet. So I strongly disagree with the way they're reporting this. Basically, the second quarter is down 4%, and the revenue bridge is up 8%. Operating income margin. Basically, cash is king, so they're at $194 million. At the end of the day, reading through all this, that is a negative as well. It is down 0.6% from 2022. Just like the previous slide, this one excludes the LiveWire as well. The operating income margin, $530 million, year to date at 19.2%. It is up from last year of 16.9%. This boggles my mind, and we'll talk about that in a little bit at the end. Summary of the financials, they're boastfully saying a profit margin, operating income margin percentage of up 24.5% at $59 million. Revenue, they're stating, is up 25.3% at $117 million. We'll talk about that at the end. We got lots to cover. This next slide shows the retail credit losses continue to climb. For the second quarter in a row is up to 2.6%. Receivables is up 0.2%. This is Harley's funding status, and they use the term MTN. That acronym stands for medium-term notes, which are notes that are usually mature in 3 to 10 years. So that gives you a brief overview of the medium-term notes that are on Harley's table. LiveWire continues to be the boat anchor on this financial sheet. It is at an operating loss for the second quarter in a row of another $32 million. Now, in the first quarter, they projected it losing a total of $100 to $125 million for the physical year of 2024. They are at 50-some million 2 quarters into it, so they're on track to what their predictions of their losses are. Their operating income is showing $411 million versus the second quarter in 2022 of $244 million. A brief overview of the company in general is they expect revenue growth flat to 3%, operating income margin 13.9 to 14.3%, operating income down 20 to 25% for Harley-Davidson Financial Services. The LiveWire has been downgraded. They originally were saying 1 to 2,000 bikes being sold. They have lowered that down to 600 to 1,000 bikes, and they have upped the ante from 100 to 125 million in the last quarter to 115 million to $125 million loss in 2023. So that is continuing to trend and be cancer on the financial sheet. This next sheet shows basically the profitability. They are boasting that it is returning back to when 2014 was at $3,700 per retail unit, and they are about there at this time. Explaining on the right, I won't go over it, is the what they state as the key drivers to make that happen since 2019. This next slide shows basically their outlook for the supply chain outlook. Gives you a kind of overview of it. Declining ocean freight offset by warehouse and labor increases, higher labor costs and supplier costs increases driven by labor rates, partially offset by decline in commodity and costs. And this last slide breaks down the 3 categories or segments of how they report on their financials. Looking beyond the numbers, Harley-Davidson had a pretty eventful second quarter of 2023 with the launch of the new CVO models, the Fast Johnny Enthusiast Collection, the 𝕥𝕤𝕜𝕜 Highway King Icon model, as well as a pause in production due to parts supply issues. And of course, Harley-Davidson just held its 120th homecoming celebration, though technically that happened during the third quarter. Putting that big shindig aside, it was quite a busy few months for the motor company. First quarter saw a 21% increase in motorcycle sales revenue despite a 12% drop in the number of actual bikes sold. But the second quarter went in the opposite direction. Unit sales were actually up 3% worldwide, while the motorcycle sales revenues were down 4%. Go figure. Harley-Davidson reported sales of 51,500 motorcycles in the quarter compared to 50,200 in the same quarter of 2022. Motorcycle sales revenue, however, dipped from $890.9 million from $935.2 million. Harley-Davidson reported $1.2 billion in revenue from its motorcycle business, down from $1.3 million in 2022. Overall, including the LiveWire and Harley-Davidson Financial Services, Harley reported a net income of $178 million in the second quarter of 2023 compared to $215.8 million in the same period last year. Looking past the numbers, here are some key takeaways from the Harley-Davidson second quarter. Production stoppage. Harley-Davidson paused production in June after it was notified of a quality issue on a brake hose assembly provided by a Tier 2 supplier. Pro 𝕒𝕑𝕝. Full manufacturing operations resumed at Harley-Davidson's York facility after a couple weeks, but the decrease in global wholesale shipments. But the delay resulted in an uneven product mix and a 10% decrease in global wholesale shipment. The new CVO Road Glide and CVO Street Glide were not affected by the delay, as they do not use the same brake hose assemblies. Due to the timing of the stoppage, its full effects won't be seen until Q3 numbers are in. LiveWire update. LiveWire was in a strange place through both the first and second quarters. Yes, the electric brand continues to bleed money, reporting a net loss of $40.7 million. But that's what you'd expect from a newly established company that hasn't fully ramped up operations yet. A loss of $40.7 million sounds like a lot, but considering Harley-Davidson apparel sales alone topped $66 million, and even then, that's down 14% from 2022, it's a loss the company is willing to take at this stage. Of course, that excuse only holds for so long, and that's where the next quarter will be more interesting. The company sold just 33 LiveWire ones over a second quarter of 2023, compared to 225 in the same period of the prior year. 21 of those came when they were still branded as Harley-Davidson LiveWires. Now, correct me if I'm wrong, but didn't Harley-Davidson make the LiveWire a standalone company in May of 21? And it is now almost August of 23, soon to be 24 models released. So we're looking at, these bikes have been laying around how long, and they're just now moving them? That's Harley is not giving you that information clearly, and they're kind of slipping it under the wire, pun intended. Karim Dunez, LiveWire CEO officer, says $260 million in cash and cash equivalents, plus access to non-binding term sheet with HD worth another $200 million. So the financing is there to get through the current stage. Combining the first two quarters, LiveWire reports a loss of $61.9 million, and the company's forecast for a year loss of $115 to $125 million. At some point, however, the numbers are going to have to start turning around quickly. The third quarter will be a better barometer of how the company will proceed, thanks to a number of key developments. LiveWire expanded operations to Europe late June at the tail end of the second quarter, so European sales won't really have an impact until the current quarter. The S2 𝕼𝕒𝕟 was also pushed back this quarter, and the LiveWire confirmed production has now begun, with the first units just starting to roll off the production line this week. The delayed launch may have also played a role in declining sales figures for the LiveWire 1. As Dunez says, riders have been holding off for a more affordable 𝕼𝕒𝕟. Progress is also continuing on the next model after the 𝕼𝕒𝕟, the third model of the brand and the second to make use of the S2 platform. LiveWire now forecasts sales of 600 to 1,000 units on the year, down from the previous outlook of 750 to 2,000. With just 96 LiveWire 1 units sold in the first half, LiveWire will need a strong response to the 𝕼𝕒𝕟 and a good showing in Europe to reach its target. Growth in Asia. Harley-Davidson reported second quarter sales of 7,500 motorcycles in the Asia-Pacific region, a 24% increase from 22, with strong demand in Japan, China, Australia driving the growth. The Asia-Pacific region is not only the fastest growing region for Harley, it's also inching closer to its second largest region, the Europe, Middle East, and Africa region, which reported sales of 8,100 units in the quarter. Johan Zeitz also clarified a few details about the company's relationship with Hero MotoCorp. Hero is Harley-Davidson's distributor for India for 600cc and larger models, but recently launched the X440 is driven almost entirely by Hero under a licensing agreement. That means the sales of the X440 and any other models produced under the agreement will count entirely on Hero's bottom line, and the agreement will only appear in Harley-Davidson's books as licensing income. Dealership revamp. The second quarter saw the first dealership to complete its redesign under Harley-Davidson's Project Fuel program. The dealership Harley-Davidson of Wesley Chapel, Lutz, Florida, completed the transformation to modernize the dealer experience. Harley-Davidson says more revamped dealerships will come over the next few quarters. So there you have it, my thoughts on the Harley-Davidson Q2 financials. I think the ship is still sinking. I think there's a lot of smoke and mirrors on how they serve it up, with LiveWire kind of hidden from the bottom line and on a standalone sheet on its own. So they can brag about how good the numbers look in other areas. So I disagree with that. It's still under the corporate umbrella that again is just putting lipstick on a pig, or a hog in this case. So would I invest in Harley based on Charles Schwab bailing out on $1.3 billion worth of stock a week ago? No, if the big boys are jumping ship, there's a reason. They think it's going to be a stinker and going to lose them money. So I would not recommend it. I hope you enjoyed today's recap of Q2 financials. I hope it was informative and you learned something today. I'm Eric, and you're watching Kraken's Garage. Peace.